Welcome everyone to Vested Interest. This is Shane back again for another portfolio update. We do these every Sunday morning. We are going to cover the $1,665 we added to the portfolio this week. Before we get into that, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. And for those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing, buying stocks in good companies that pay growing dividends and hold for the long term. It's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible, so it really boils down to consistently investing, dollar cost average, whether that's weekly, monthly, quarterly, semi-annually, once a year, whenever you get your taxes, whatever your investing timeline is. Again, bi-weekly, some people get paid. Dollar cost averaging into dividend growth stocks and growing companies with positive cash flow that covers the dividend with a high return on their invested capital. I cover all my investments and activity in the portfolio on this channel. That's what this is. We're going to go over any capital added. I did add $1,665. We're going to go over any options that I was into for the week, any dividends paid out. If I make any sales, I'll cover those as well. There is nothing to pay for on this channel. It's free to see what I'm doing. No paid paywalls or Patreon accounts or other sites you need to subscribe to that other YouTubers might charge. We all have enough to pay for. So again, it is free to see what I am doing in my portfolio every week. But if you would like to help the channel, go ahead and hit that thumbs up button down below. Hit that thumbs up if you are a dividend growth investor, or if you are an investor in general. Hit the subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Hopefully you're on your own investing journey as well. Don't forget to hit that notification bell so you're notified whenever we put out any new content. And drop a comment down below. Pretty active week this week in the stock market overall. It started out pretty good in the beginning of the week, but then we had some negative news as far as inflation being a little higher than anticipated. So that really sent the market into a tailspin. A lot of pullback there the last 3 or 4 days of the investing week. And a lot of red in my portfolio. Let me know in the comment section down below, how does your portfolio look? Did you see a lot of red in your portfolio? And let's jump into the portfolio update real quick. And again, for those of you who have subscribed to the channel, I really do appreciate it. And for the rest of you, hitting that thumbs up, hit the subscribe button, hit that notification bell. It really does help out a small YouTube channel like mine. Now, on to options. We're going to touch on the options first. We did finally, after a couple weeks of not having any hit, had a couple hit. We actually put out 4 or 5. These are the only 2 that hit this week. We did a covered call for Johnson & Johnson, as you can see here on Monday the 8th. So one contract for ticker J&J, that's Johnson & Johnson, expires on April 12th. That was Friday. $155 strike price. We did not hit that price, but we did receive $42.45 in options premium. And as you can see down here, that covered call expired worthless. So we kept those shares. We kept the $42.45. And the other one was one contract. Same date. We opened them both on Monday into BABA, Alibaba, ticker BABA. $75 strike price. This one did not hit either. You can see here it expired worthless on Friday, but we did get $20.45, and we kept that options premium as well. So we received all total $62.90 in options premium, and that was part of the funds we reinvested back into the portfolio this week. Now on to dividends. We did receive dividends on the 12th from Nutrien, ticker NTR. This is out of the materials sector here. Now this is also a company out of Canada, so we're going to talk through that a little bit. We received $68.90 right here. And those funds, we have the drip set. They go right back in and pick up the shares of Nutrien. So whatever company pays out dividends, whenever they pay out those dividends, it goes right back in and buys more shares. In this case, 1.28042 shares of Nutrien, and those 1.28042 new shares added an additional $2.76 in passive income, and that is that dividend snowball in effect. So we already have shares of Nutrien in the portfolio. Those shares paid out dividends. In this case, the $68.90. That $68.90 in dividends went right back in and bought more shares, and those new shares added additional passive income. That is the dividend snowball in effect, right? Now we get to the first new capital added. We added, it shouldn't say the first, it should say the 8th. We added new capital, $1,233.87 in new capital on the 8th. With those funds, we picked up 2 more shares of CVS Health Corporation, ticker CVS, out of the healthcare sector at $74.30. Now, I bought early in the week, as you can see on Monday. So not only did we go in and do the options on Monday, but we added a lot of capital into the portfolio on Monday as well. And to be honest with you, had I just waited till the end of the week, and you can't time the market, that's the thing. When I bought them, I was comfortable with the prices, so they pulled back. I should be even more comfortable now and be looking to buy more of these same companies, and that's the plan here over the next several weeks if they stay down. But I bought CVS at $74.30, and I think by the end of the week it was down to $68 per share right in there. We'll see that here in a little bit. Cisco Systems, we picked up 4 more shares of Cisco, ticker CSCO, out of the information technology sector. Picked up those shares at $48.46. Added 2 more shares to our Alibaba Group holdings right here, ticker BABA. This is the Chinese company we've been adding to here for the last month and a half or so. We picked up those shares at $72.17. I think they ended the week at about $71 and some change. Realty Income, we went ahead and added 2 more shares to our Realty Income position, ticker O. This is out of the real estate sector. We picked up those 2 shares at $53.35. I think Realty Income even ended the week at like $52 and some change. Not much lower, but a little bit. Comcast, ticker CMCSA. This is another one we've been building out. It's over 100 shares, so we're going to nibble a little bit and continue to add to this. I'd like to get it to 200 shares. We added those 4 shares at $40.84. I think this is down in the $38 or $39 range now. And the other one we're still building out, American Waterworks. This is a utility company, and I'm sorry if I didn't mention it. Comcast is out of the communication sector. American Waterworks is a utility company out of the utility sector. Picked up those 4 shares of ticker AWK at $119.27. I believe this one was another one that pulled back down in the 116 range. So we're not quite to 100 shares on this one. We're going to keep adding, so I don't mind that it pulled back. I'm just going to continue to add and bring down that cost basis and increase my potential future returns and my dividend yield. All total, these new positions here added $35.89 in additional passive income over the next calendar year. And we weren't done. We added another $431.91 on the 9th and the 10th, and those funds bought us 3 more shares of Medical Properties Trust, ticker MPW. This is a REIT out of the real estate sector, and I've been nibbling on this one. Anytime I have, this was really the last buy I did it for the week, so anytime I have a little bit of extra funds, I throw it into MPW. In this case, extra $12, picked up 3 shares. 1 share of S-Bucks. This is Starbucks, ticker SBUX. I have been saying for a while now, I like it in the $85 or lower range. It finally got there, so I added, and this is basically the funds I received from the options for the week. Picked up 1 share of Starbucks, ticker SBUX. This is out of the consumer discretionary sector. And these last 2 ETFs here, these are our weekly buys. We are going to be buying these at least one every week, regardless of what the market is. So we added 1 more share of SCHD. This is Schwab's dividend ETF here. And ticker VTI, ticker SCHD for Schwab, and ticker VTI, Vanguard Total Stock Market ETF. That is just all the stocks in the United States stock market. We picked up the SCHD shares at $78, 1 share at SCHD at $78.45. Actually, I think this was down in the $77 range by the end of the week, and we picked up the 1 share of VTI at $255.40. And I think this ended right around $252, I believe. Got down there. All total, these new shares, the $431 and the shares that were purchased there, added an additional $11.04. Total invested, $1,665.78. All total with the Nutrien dividend plus the new shares we added, $49.69 in additional passive income over the next calendar year. Now we'll run through the sector weights here real quick. Communications makes up 9.95% of the portfolio. Consumer discretionary at 4.65%. We're going to be building this one out a little bit more. We'll probably nibble on BABA for a while, as long as it stays under our cost basis. Our cost basis is around $73. I think it's down in the $71 range, so we might pick up a couple shares, every other week or every week here going forward. We just started that position in Starbucks, S-Bucks there. So I'd like to build that one out to over 100 shares over the next month and a half. If it stays under where we want it to, where it's 15% of its 52-week low, I would actually like it to continue to pull back so I can add to it as it falls. It's down in the $84 range. I don't know if it's going to bust through its 52-week low, but if it does, I would anticipate it going back down into the 70s. We'll see. Consumer staples makes up 10.77% of the portfolio. Energy sitting at 6.08%. Their enterprise product partners and Enbridge are 2 that I'd like to add to in my portfolio here especially Enbridge. It's below my cost basis, so I may be adding to that one next week. Financial sitting at 6.23. If Bank of America was to pull back, I'd like to add there. Healthcare sitting at 14.44%. Johnson & Johnson, Pfizer, and CVS, I'm going to be adding to all three of those if they remain pulled back. Industrial sitting at 7.13%. Technology sitting at 7.03. You saw the Cisco purchases that we made. I'd like to continue to add that if it stays under $50 per share. Materials sitting at 11.52%. Utilities at 9.31. Again, we're going to build out the American Water Works position at least to 100 shares. We've got 4 more to add, so we're going to at least add through next week, if not over the next couple weeks. Again, once we get to 100 shares, we might nibble a little bit. I wouldn't mind getting that one to 110, 120 share count there, and then maybe back off pretty good. REITs and real estate sitting at 10.78, and ETF still the slice here, smallest slice, little sliver, 2.13% of the overall portfolio. Now, here's what a lot of you come to see every week, and I'm going to show this every week, whether the market's up, whether the market's down, whether the market's floating sideways, whether I'm up, whether I'm down, or whether I'm floating sideways as far as profits go. I'm going to show you what a real portfolio looks like built out over time. I do believe in a bit of diversity. I don't mind having a couple ETFs in there for further diversifications, and for some of you out there who are ETF investors who want to make it even simpler without having to do any work. These are the 2 ETFs I would recommend. I have them in my daughter's account. Well, I have SCHD in my daughter's account. VTI, I'm looking for more of a pullback. If it drops back into the 230 range, I'm going to add it to both of their accounts. So that tells you where I think that VTI might be pulling back. We'll see if it does. But here you can see are all of the positions in the portfolio. The tickers here on the far left column. Total shares I own, current price as of the close of business on Friday, market value as of the close of business on Friday, my average cost per share, my purchase price, how much I have into each position, total return, whether I'm up or down. You're going to see it here. Obviously, if I'm in the red, that means I'm down. And there's a lot more in the red this week than there was last week. A big pullback this week in the market overall. Percent return right here, green, I'm in the positive, red, I'm in the negative. Sector weights, so what sector each company falls in. You saw the sector weights on the previous slide. This is for each individual position, whether they're a quarterly, monthly, or semi-annual payer. And you'll notice in the semi-annual column, I do have a couple that may not be only semi-annual. BABA only pays once a year right now. I'm hoping they get to at least semi-annual, if not quarterly. SBSW, they pay once. Most years they pay twice a year. Sometimes they pay once a year. Sometimes they pay 3 times a year if they throw out a special dividend. Same thing with Vale. Most years they pay semi-annually, twice a year. Sometimes they pay once a year if the metals market's doing real bad, and they've paid 3 times a year where they've put out special dividends. So I'm just going to leave it like that for those ones that are just one-offs and call it semi-annual and hope for the best that they pay twice a year. Current dividend yield here as of the close of business on Friday. My yield on cost in this column, the portfolio weighting. So what we saw in the previous slide was the sector weighting. Here is each individual position's weighting. Estimated annual income here, payout months, the dividend growth here, and where it sits at 15% of its 52-week low. So let's talk through this. So we just added Starbucks, right? We've got one share at $85.92. So chances are it's not going, unless it goes below its 52-week low, chances are it's going to get back above our cost basis. I'm willing to pay 86, 87, 88, 89, 90, all the way up to where it sits at 15% of its 52-week low, $98.44. Once it goes over $98.44, I don't really want to add to it unless it keeps my average cost per share under that 15% of the 52-week low. I hope that makes sense. For example, AWK is one, same thing. I'm looking to build that out. It is a little bit below my cost basis, but I'm willing to buy up to $131.38. So I could add to this even if it was above that 120, up to 130. Right? Same thing with BABA. My cost basis is $73.46. If it was above $73.46, so long as I keep it under $76.62 for my cost basis, I would continue to add to that one as well. That gives you an idea of how I am using 15% of its 52-week low. It sets a kind of a high point I want my cost basis to be at. Hopefully that made sense. Now, total shares, I have 6,373.463 shares total. Market value, $232,973.24. Big pullback. We were in the $240,000 range last week, right? and $230,000 and $266.70 into the portfolio. I am still up $2,706.54. This is not what I focus on. I'm up 1.18%. I say that every week. I said that whenever I was up, 4 to 6%. I say that whenever I'm down 4 to 6%. I am not focused on the returns. I am focused on this one over here. That's why I have it circled in red. Current yield sitting at 4.459%. My yield on cost 4.512%. And this is what I'm focused on. The dividends, the passive income paid out by all of the positions in the portfolio continues to go up week over week, month over month, quarter over quarter, year over year as I add new capital like I did this week, as dividends are paid out like Nutrien did this week, and as companies increase their dividends year over year. So as you can see, the companies highlighted in yellow are ones that have already increased their dividends this year. And it increases this dividend snowball here. And this is setting a new record every week now. Currently sits at $10,388.71. Very nice to see the growth of the dividend overall. So hopefully you are getting some benefit from this channel. The portfolio updates every week, being able to see a dividend portfolio built out over time, the ups and downs associated with it. Like I said, big pullback in the market this week. That should not scare you. Just because there are more positions, CVS, for example, look at that, down to $68.64. I bought it in the beginning of the week at $74. It dropped $6 in a week, right? If that freaks you out, then you need to just stick to ETFs and put money in them every week, because this to me now makes CVS more of a buying opportunity. If I liked it at $74, my cost basis being $70.46, I should like it even more at $68.64, right? It's on sale now. It's $6 cheaper than what I paid for it at the beginning of the week. The market seems to be the only place where people go in and they're buying stocks, and then as soon as something goes wrong, as soon as they see red, as soon as they see a sale, they want to sell their shares and get out of it. That's not the time to sell. That's the time to double down. If you've done your due diligence, if you know it's a good company, growing revenue, good margins, the product that they're selling is growing over time, it's something that people want and are going to continue to buy. If nothing has changed with the business model, with the fundamentals of the business, if you see red, like Comcast, all of a sudden now it's down 7%. Well, if my cost basis is $42.38, I should still be buying at $39, right? Shouldn't I? It's 7% cheaper than what I was paying for it. Yeah, I'm going to continue to buy. That should be the mentality. The more red I see, the more buying opportunities. Now, if something has changed with the fundamentals of the company, their margins are really off, their product is not selling, it looks like they don't have enough free cash flow to cover the dividend. If something has fundamentally changed with the business, that's a different story. But if the fundamentals of the business still remain intact, the product still remains intact, then you should be willing to buy. And just because the stock price pulled back should not be a reason to sell. Or you didn't do your due diligence in the first place and you don't really understand what you own, right? So don't be afraid of red. That's what I'm trying to get at. I'm going to get off my soapbox. Let me know if you have any questions down below. Let me know what you were buying this week. I really would love to hear from you. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit the subscribe button. Hit the subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment. Let me know what you're investing in this week. Did you get any dividends? Are you running any options? Did any of your options hit this week? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in the presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and candid money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of a certified financial advisor.